ladies and gentlemen, and thank you for keeping tuned at Smart 24. My name is Anthony, and I'm your host, and this is Financial Markets, where we talk financial markets in Uganda, East Africa, and the continent as well, and what's trending, what's currently making headlines around these, of course, platforms in terms of financial markets, that is capital and money markets. Remember, you can catch the show every Monday to Friday from 10 a.m. to 1 p.m. And you can also catch us on our YouTube live stream every day. Of course, that is at Smart 24, that is our channel. And on GoTV, that is Smart 24, channel 394. That is where you can catch the show, so you can keep up with every piece of information concerning business, and in particular here as financial markets. Moving on to another story making headlines, biggest mobile, telecom operator, Safaricom from Kenya, and one of the biggest global digital operators, Visa Card, have actually, launched a virtual payment card which will allow users to use of the mobile Pesa, that is the M-Pesa mobile money platform, to make digital payments globally. The partnership will, of course, extend the available network for Safaricom's 30 million users from 400,000 merchants to millions internationally, including major retailers and platforms like Amazon, Alibaba, Netflix, and Spotify. It is the latest evolution of the service, which has grown from a modest money transfer service in 2007 into one of the world's most successful payment networks, becoming, of course, Safaricom's single biggest source of revenue in the process. It is estimated that Africa accounted for at least 70% of a $1 trillion transaction value in the mobile money sector in 2021. Africa's transactions rose by over 40% to $701 billion in, of course, 2021, from $495 billion in 2022. Of the 1.35 billion registered accounts globally, 605 million were on the continent of Africa. Now, despite the success of M-Pesa, there is still room for growth. East Africa, led by Kenya, dominates the market, accounting for over 57.5%. That is about $403.4 billion worth of transactions. West Africa is at currently $239.3 billion, and of course $50 billion in Central Africa, and 4.9 billion and 3.7 billion in Southern and Northern parts of Africa, respectively. The growth of services has been stifled by restrictive regulation, notably in major markets such as Nigeria and high potential countries such as Ethiopia. Ethiopia opened up its mobile money space by launching its first services in May 2021 as part of the wider liberalization of the sector, with the aim of course, attracting up to 21 million users in the first year alone. However, taxes on mobile payments, which have, of course, been introduced in Cote d'Ivoire, Tanzania, and Uganda, are a hindrance to growth in the sector, and many others. Of course, that is a story coming in from Kenya there. Safaricom, one of the biggest telecom company in East Africa, and one of the biggest in Africa as well, has actually launched a virtual payment card, and of course this is in partnership with global global money operators, that is the Visa, and they are saying we can actually virtually pay for things using this virtual payment card. The partnership will extend, of course, the available network for Safaricom's over 30 million users from 400,000 merchants, of course, to millions of internationally recognized users, including, of course, major retailers and platforms such as Alibaba, that is a company there for delivery, and Amazon, Netflix, and Spotify. And we are seeing Kenya's growth in terms of the virtual world, in terms of virtual transactions, in terms of fintechs, that is very accelerated, with Google actually having a hub in Nairobi there. So it's a very innovative country, I have to say, and they have invested a lot in IT. That is why we are seeing some of these fruits come out of Kenya, because Kenya is a company that has distinguished itself as a sole investor in, of course, IT and of course virtual transactions, to see that convenience and speed are taken care of in terms of transactions across borders. So I hope we follow up with that as well here in Uganda. Maybe one day we can as well actually get there and try to use virtual payment systems as Zabu and so on, to buy stocks, to send money to different countries effortlessly without any hurdles or any regulatory issues that we currently are facing. Moving on to another story, there is trouble at the Nairobi Stock Exchange as, of course, prices benchmark indicator fall. Now, tough times loom for the bearish, that is Nairobi Securities Exchange, as a cocktail of global and, of course, domestic factors collude to push the benchmark index below the 1,700 Kenya shillings mark for the very, very first time, of course, in 20 years, signaling muted activity and a free fall of stock prices on the 68-year-old stock market. Remember, Nairobi Stock Exchange was the very first stock exchange in East Africa, that is back then in 1950s, 1960s. It was the only stock exchange, and it was actually called the East African Stock Exchange, where all the East African companies were listed, those that were trading shares. And it has been here in place for over 68 years. So we are seeing a free fall in stock prices for the very first time in over 20 years, signaling muted activity, meaning there's not much going on the market, and of course investor escape out of the market, as many investors are running out of the market. Now, one of the newspapers in Kenya learned that the falling turnover on the Nairobi Stock Exchange and a drop by the Nairobi Stock Exchange 20, that is share index, that is they have a couple of share indices, and of course one of them is the Nairobi Stock Exchange 20 share index, dropped to a low of 1,681.8 last week, and this is largely a result of massive sell-off by foreign investors who are fleeing the frontier and emerging markets in search of safer havens following a rise in interest rate in the United States, and the news that Sri Lanka has defaulted on its debt obligations for the first time in its history. Now, the situation has been compounded by events in the local environment, including, of course, uncertainty over, including uncertainty over the forthcoming general elections, weakening currency, dollar shortage, rising cost of living, and a general apathy by retail investors. Now, the last time the benchmark index, which measures the performance of the 20 blue chip companies on the Nairobi Stock Exchange, fell below the 700 mark was in 2002, when it was actually hit, when it actually hit 1,087, all the way from 1,935 in 2003. The perception of the currency weakening compounds the problem, according to Paul Mwai, who is the Nairobi Stock Exchange vice chairperson, last week, as he mentioned to journalists. Now, the International Monetary Fund opened rescue talks with Egypt, Tunisia, of course, both big importers of wheat from Russia and Ukraine, and with Pakistan, which has imposed power cuts because of high cost of imported energy. Turkey is battling over 70% inflation, but has so far avoided the need for a bailout. Now, the dollar shortage has also affected these Nairobi securities. The scarcity of the US dollars in the Kenyan economy has adversely as well impacted trading by foreign investors who control more than 50% of the daily activities on the stock market. The Nairobi Stock Exchange has historically recorded foreign investor participation in the range of 60% to 70% between 2019 and the first half of course, 2021. But their activity at the Boaz fell to over 54.88% in the 3 months of March this year, from 57.73% in the last 3 months to December 2021, according to data from the Kenya's Capital Markets Authority. Now, Saiton Investments attributes the price declines by most stocks, particularly large cap stocks on the stock exchange, as a result of increased sell-offs, as many people are selling off their shares to actually go and invest elsewhere. In May, the Federal Reserve, that is the central bank of the United States of America, moved actually to tame soaring inflation in the United States by announcing the sharpest rise in interest rates in over the past 20 years as well. Now, the Federal Reserve's benchmark rate was raised by 0.5% points to a target rate range of between 0.75% and 1%, the largest increase since 2000. It followed, of course, a 0.25% point increase in interest rate in March this year. That is another story right there. Coming in from, of course, Nairobi, there's been a witness of, free fall in the prices of, in the stock prices right there, as many companies are seeing sell-offs by investors, especially the foreign investors, following the increase in, of course, the interest rate of the Federal Reserve of, that is the central bank of the United States of America. Many companies, many investors are pulling out of, stock markets in Nairobi, and of course as well due to the looming election that is creating a lot of uncertainty and of course, questions that investors may have and may not have answers. What next for companies like these? What next if, governance is changing? So that skepticism has led to a free fall in prices on the Nairobi stock market. And we will be following up with that, of course, later on in the program. But remember, the stock market is influenced by very many factors. Everything that affects the economy affects the stock market. As you can tell from probably inflation, as inflation shoots up, the costs of production of these companies are going to be quite high. Because most of these companies, to be honest, rely on resources that are purchased, and these resources sometimes are natural, sometimes they may not be natural, but as well, these could influence the costs of production, as one may need to purchase raw materials, one may need to purchase fuel in order to make something, and of course, all listed companies are manufacturing companies, maybe IT companies. They are affected by definitely what is happening on the economy. And this comes back now to the stock market. As traders, on the stock market, as shareholders buy and sell shares, if more people are selling, it means the prices of the stocks are going to go down, because we are going to have quite a high supply. Many people are willing to actually trade these shares. So we are going to see a decline in share price. And this is exactly what we are seeing in Nairobi. As well, here in Uganda, we can see companies that have actually lost in terms of share price. It has been due to sell-off of very many shares by already, the company shareholders who have a lot of shares in the company. And so, given the fact that most of these companies in our stock exchanges, even the Nairobi stock exchanges, we are seeing more of foreign investors than local investors. So most foreign investors are pulling out, and foreign investors take big chunks of these companies. In terms of turnover, they have lots and lots and lots of shares in these companies. So every time they pull out, they leave a gap. They sell shares and leave a gap of quite many shares, and this creates loss in value of the shares, and thus a decline in the stock price of that particular company. This is exactly the situation at hand in Kenya right there. So in Uganda, we have not seen so much decline or increase in share price, probably due to muted activity as well on our market. As you can see, our companies, the 18 listed companies, you can find 1, 2, 3 companies having a drastic change in share price, but not much as is happening on stock exchanges like, of course, the New York Stock Exchange, the London Stock Exchange, and so on, because these companies keep trading and keep improving as the stock market moves by. But we will watch that space and see what happens next for those Kenyan companies, as we also keep our eyes on what's happening to the Kenyan shilling. Now, as well, if you can explain the issue of the Kenyan shilling, we are seeing that the shortage of dollars in Kenya is, of course, triggering emergence of parallel exchange rates that has been, of course, seen lenders buying and selling well above printed official rates. The manufacturers lobby, of course, warned last week, at the beginning of last week. The Kenya Association of Manufacturers, that is the KAM, said that on Monday its members, the biggest importers of goods, were buying the dollar at a rate of over 120 Kenya shillings, yet the actually central bank's official exchange rate was 116.81 units as of Friday last week. The lobby reckons that the volatility in the exchange rate market has slowed dollars trading among lenders or interbank deals, further worsening the scarcity of the US dollar or the US currency. Now, the exchange rate has long been a sensitive issue, with most players preferring, of course, the silence for fear of reprisals from the central bank. The central bank has in the past rebuked Stanbic Bank Kenya after a research note issued by its parent South Africa's Standard Bank said a parallel exchange rate was emerging in Kenya. This forced Stanbic Bank, of course, Kenya, to issue a public statement distancing itself from the research note, which said that two forex exchange rates have been developing in the market. Although the formally quoted exchange rate for the US dollar in the market is hovering around 115 to 116, none of our members can access the currency at a price in the market. The real market price is now well above 120 Kenya shillings, of course, according to Kenya Manufacturers Association chairman Mukai Kinyuha. So we see many challenges, faced by the Kenyan, companies there. With their dollar being, of course, with their currency, the Kenyan shilling, struggling against the dollar, which is crashing, literally crashing down the Kenyan shillings. And of course, that creates a lot of loss in value for the currency. It contributes as well to already existing price inflation and of course other external factors as well involved in this. We will be, of course, watching and seeing what governments can do, what the companies that are listed on the market could do to improve what's happening on the market. As well, we could look at regulators like the Kenya Capital Markets Authority and the Uganda's Capital Markets Authority to see what can be done to actually solve some of the issues that are at hand, that is, of course, on the stock market. But remember, I want to remind you that Altex East Africa and Clearing Limited, we have something new coming from them called Zabu. Zabu is simply a way that they have introduced to trade on the stock market at the convenience, of your smartphone. Sorry, even if it's not a smartphone, at the convenience of any phone, any mobile phone, so long as, of course, it is at star. Of course, it's on MTN Momo, that is MTN Mobile Money. And of course, this will be done through dialing star 292 hash, okay? And then you access all these other, of course, the bonds and bills and of course stock prices and trade on the stock markets of East Africa, that is in Uganda as well as on the East African platforms. That is something as well you should look out for, so that you start trading and buying shares online right there at the convenience of your smartphone or your small Katochi phone, so that you can start participating in the capital markets space of the country. As well, I just wanted to remind you of a Visa launch, of course, that was done by Safaricom and Visa. They launched a virtual payment card. This payment card will be able to be used by several individuals to access goods and services on all different platforms, on all different continents, platforms such as Amazon, Alibaba, Netflix, and Spotify, and the like. Now, its latest evolution of the service, which has grown from a modest money transfer service in 2007 into one of the world's most successful payment networks, becoming Safaricom's single biggest source of revenue in the process. It is estimated that Africa accounted for over 70% of the 1 trillion transaction value in terms of mobile money sector in 2021, meaning Africa uses more mobile money than any other part of the world. And we rely a lot on mobile money transactions. So this virtual payment system will actually help supplement the already existing, mobile money payments, so as people can pay for goods and services conveniently and in the fastest way possible. Now, despite the success of mobile, that is M-Pesa, there is still room for growth because East Africa, led by Kenya, dominates, of course, the market, accounting for over 57.5% worth of transactions. West Africa, of course, is at 239.3 billion US dollars, and of course 50 billion US dollars in Central Africa, and 4.9 billion and 3.7 billion in Southern and Northern Africa, respectively. So we as East Africa still stand out as people with the highest transactions on mobile money in terms of value. So Safaricom and Visa are coming up with this virtual payment card that will help people actually get to use more of their mobile money to actually pay for goods across the board without any or slightest inconvenience at all. That is your top story there, and all the other top stories. Remember, you can follow the conversations on our social media platforms. That is on Twitter at Smart24, and then of course on Instagram Smart24_TV. You can also find us on YouTube on our live stream, that is Smart24 TV. You can also visit, our website, that is www.smart24tv.com. To find out these and more of your top stories. We're going into a very short break, but when we return with Mr. Kayemba Isaac as we break down the financial results of BAT, that is British American Tobacco. Don't go anywhere, we'll be right back.